Sparx Asset Management was established in 1989 in Tokyo, and we are delighted the founder, Shuhei joined us recently for an interview. After 30 years of flatlining GDP growth in Japan, Abe-san feels the time is right for international investors to look again. We cover a lot of topics, beginning the interview with Abe-san addressing some commonly held views about Japan from Warren Buffett from back in 1998, over 20 years before Buffett's recent $6 billion investment in 5 Japanese trading companies. We hope you enjoy the interview. Abe-san, thank you so much for talking to us, and I also want to thank your team at Sparx for helping us put this interview together. Really appreciate your time today.
Robert, thank you. Thank you very much for letting me be here. I'm very happy that I can speak to you.
We are going to begin with a short video from Warren Buffett from 1998, around 10 years after you founded Sparx. He made some comments in response to a question he was asked about investing in Japan.
Yeah, right here.
Your thoughts about Japan?
My thoughts about Japan? I'm not a macro guy. Now, I say to myself, Berkshire Hathaway can borrow money for 10 years at 1% in Japan now. 1%. And I say to myself, gee, I took Graham's class 45 years ago, and I've been working hard at this thing all my life. Maybe I can earn more than 1%, you know, if I really worked hard at it. 1% annually. It doesn't seem impossible, does it? So I wouldn't want to get involved in currency risk, so I'd have to do it in something that was yen denominated. So I have to be in Japanese real estate or a Japanese business or something of the sort, and all I have to do is beat 1%. And that's all the money's going to cost me, and I can get it for 10 years. So far, I haven't found anything. It's kind of interesting. The Japanese companies earn very low returns on equity, and they have a bunch of businesses that earn 4, 5, 6% on equity, and it's very hard to earn a lot as an investor when the business you're in doesn't earn very much money. Now, I find very few wonderful businesses in Japan at present now. They may change the culture in some way so that managements get more stockholder responsive over there and returns are higher. But at the present time, you'll find a very lot of low return businesses, and that was true even when the Japanese economy was booming. I mean, it's amazing. They had an incredible market without incredible companies. They were incredible in terms of doing a lot of business, but they weren't incredible in terms of the return on equity that they achieved. And that finally caught up with them. So we have so far done nothing there. But as long as money's 1%, I'll keep looking. I mean,
And so, with apologies for the fairly grainy footage there from 1998, let's fast forward to 2020. And as most of you will know watching this, Buffett recently made a $6 billion investment in Japan. Given this investment, I wondered if you thought that investment was a significant milestone, and perhaps you could also address some of the issues Buffett mentioned in the video.
Well, let me talk about what I think. Mr. Buffett made that speech 1998, 20 years ago. And he said as long as the cost of capital will stay as is, 1%, he will keep watching. He should keep watching. You know, it is the still cost of capital here is, for him, is less than 1%. And I think that's what he did. He, I'm sure, kept watching, and he found the very interesting companies that were trading companies. I thought about it a lot, why he became interested in it. And he bought a package of it, not the one trading company, but the 5 of them. What I concluded is, and I read what he said somewhere, he was looking into the opportunity to participate in the operating platform for this end of the world. He built that in the US through building Berkshire Hathaway over the past 50 years. And now he became interested in Japan. He appreciated the value of owning or participating in the platform that he can operate. And for that, trading company is the best candidates that Berkshire Hathaway can extend their ability to enhance the value of operation. And he can do that through owning Japanese trading companies. But at the same time, he is not mere a strategic investment person. He is a value investor. And looking at the trading company, when he started investing, that was absolutely cheap. Price to book is around 0.5 to 0.6. Dividend yield is 5%. They are the best companies, best brands in Japan. You know, Mitsui, Mitsubishi, Sumitomo are the brands lasting nearly 150 years. So coming 10, 20, 30 years, I'm sure they are there. And I'm sure the business will be improved, because we all have to understand, past 20 years, Japan has experienced the most severe deflation that world has never experienced. Maybe during the Great Depression time, the situation was similar to what we've experienced past 20 years. It was a very, very, very severe deflationary pressure, caused a lot of trouble to Japanese companies. And trading companies, the ones who survived through that severe environment, and they are doing well. And I'm sure Mr. Buffett thought that their performance will be further improved. Return on equity in general in Japan are improving. The balance sheet in aggregate was improved quite dramatically over the past 20 years. So having the best names, offering the best economic value, I think are the ones that he started getting interested. And he further thought that that would be the base for his developing an operating platform in this country, which is still the third largest and highest quality economy in the world.
And so it sounds from what you're saying, you think that might perhaps be for Berkshire an opening gambit for bigger investments to come in the future. So turning away from Buffett to Sparx, where do you see some of the most attractive opportunities for investing in Japan at the moment?
Well, I've been recalling what happened in the world past 20, 30 years, and particularly in the US. It was relatively simple decisions to be made. If you've done that, you were okay. That was to invest in US, to invest in partially in Europe, to invest in emerging countries like primarily in China, and properties, commodities, and excluding Japan. That was the decision that you should make. And if you've done that, you are okay. And now world is thinking, what's next? Because it seems that the expected return for the US market is coming down. Stable, probably the best expectation that you can have. Europe, not easy situation. You know, if you think about the situation where Europe now faces with the COVID-19, it is not easy. China is okay. China, I think, is still continue leading the world, but there is a risk that world understood during this COVID-19 period. Overly depending on one country will give us a lot of risk eventually. So we got to diversify. And where to diversify? I think naturally people will think in Asia. What country in Asia? Japan. It's this very simple answer to figure out that, you know, if you think about it. And Japan, where is the most attractive strength that Japanese companies have achieved over the years? What happened in the US, let's say, if you observe the past 20 years, let's say GAFA, they are they're operating, they are the platformers that if you think about it further, that what do they produce? what do they actually offer that we can physically feel and see and have? None. As this economy continue going to grow, that people start to demand that they should consume something that they should physically consume, that someone should make it. And now the turn comes to Japan. Japanese will be the country that will offer the real things to the world. And this real thing has been continuously discounted because environmental deflation. But I think the deflationary super cycle is ended, that now world is getting into the phase where the prices will continue decline, continue increasing. And who will be the biggest winner in that environment? I think the guys who can make real things. It is like looking at the restaurant business. Over the past 20 years, the guys who can come up with the interesting recipe can trade that recipe. And since that recipe trade is so attractive that they start forgetting having a real kitchen in it and no chefs. And chefs are all in China. That can continue. Good thing and interesting thing that Japanese kept owning or holding, keeping the good restaurant, kitchen, and chefs, and floor to serve. So finally, the place will invite lots of people, and people will pay for the higher prices. So answering your question, sorry, getting a little long to answer. The companies that can offer real things, real brand, real quality, like Mr. Buffett has been always saying, that company has a brand that cannot be replaced by others. And there are a lot of companies which can do and fulfill your demand to offer the real things. And so please look at the companies that you know the name, that you think that their products are good, that you think that their names are global. Those companies' stock prices are very attractive at this point. Look at it.
Thank you very much. Moving to ESG investing, that is very much in vogue at the moment with investors here in Europe, the US too for sure. I wondered if there was such a strong appetite in that direction in Japan.
Robert, answer is definitely yes. ESG is not the concept that can be understood easily. A few years ago, I thought that many Japanese management thought ESG is a cost. The cost that they cannot make profit on it, but something that they should think. And I'm sure they started thinking about it, but that they could not understand why they should do it. These days, meeting a top management of the companies throughout Japan, they start clearly understanding ESG is not just a mere cost. It is the activity they can enhance their brand value. That means that they can eventually transfer that value to the prices of their products and services. So doing in a proper ESG activity will enhance the corporate value as well as the profit. And investors are supporting it. So both strong cooperation is now getting together in Japan. Japan is always the country that can understand it. Japanese companies are by nature truly care about the quality of the products and doing something good for the public. That is a very natural thing. One very important part that's been missing in this country is the idea of corporate governance, let's say. Who owns the company? It used to be owned by Japanese banks and corporations. What we call the cross-shareholding system worked well. But after bubble got burst, that system was totally unwound. That currently this market is not being owned by anyone. No one owns it. The largest owner today is the foreign institutions, but they are relatively short-term trading kind of capital. So no one owns it in long-term stable. Buffett called the permanent home kind of ownership doesn't exist in this country. So probably because of that lack of ownership, the strong corporate governance has not been yet installed. But I'm sure that time will come. And that is, if that is established, Japan probably will be seen as one of the most advanced ESG country among the developed countries.
Thank you, and very interesting. And it sounds to me like you were 80 to 90% of the way there on ESG already, without perhaps that label. Turning to the history of Sparx then, it does seem to me that you have been extremely nimble at times and willing to switch styles and introduce new strategies. You do now have this strategy called the Owners Fund, looking to invest in good businesses, but with improvable issues such as poor governance, perhaps, where you think, I think you look to take a 10 to 20% stake. You can correct me on that if I'm wrong. Is this an example of you being quite nimble and adapting and going wherever you see value to be created? And if you can just tell us what you hope to do when taking these large stakes.
Well, whether or not we are nimble, we don't know. But I'm a student of value investors. That I was primarily educated and trained by the American investors when I was a young professional. So what I'm doing is trying to find the value gap between intrinsic and stock price. If there is a gap between the two, I'll be interested. And that's what we've been continue doing it, and that's how we build the businesses. Now I see a quite an interesting value gap between the intrinsic value and stock price. Among those who are considered as a mid-class size companies in Japan, that means that market cap between $1 billion to $5 billion. Because of the fact that I said that there is no owners of those companies. Companies are practically run by the management people, and those management people act as if they are owners. Although they are not owners, but they act like owners. So from time to time, I see the lack of governance. Governance that lead the better course of strategies. Mr. Buffett always tells in his writings and speeches that companies that Berkshire Hathaway owns are very happy to be owned by them. And he said most of the case when Berkshire Hathaway owns them, although it is always the very happy relationship, but management tries hard to make their corporate value improved, not being pushed by Mr. Buffett, but they understand their role is to make the corporate value improved. I'd like to be the owner of those companies that has a long history and very strong financials and strong balance sheet and highest quality product that they can put out and they can offer, but stock price is cheap. If that's situation that I see, I want to own it. And I want to have a good relationship with them so that corporate managements of those companies start trying hard to create value for all the stakeholders, including shareholders. And those opportunities are probably the biggest opportunities that exist in this country. I think this space of value will be filled quite rapidly when that starts to be understood. I think I'm the earlier investor, as always. That I see because I'm here and I'm trained as a Japanese company analyst. I see that value now. So I welcome you to participate in the initiative that I've been taking. It is a very interesting investment theme that I can propose to those who are interested in Japan now.
Very interesting, thank you. And of course, with limited time, I haven't asked you everything that I might like to, but to flip that around, I wondered if there's any important topics that you think are just overlooked at the moment that you might like to highlight.
Well, my analysts, my younger professionals always tell me that the foreign investors are asking basically the same thing, such as aging demographics will be the disadvantage, such as public debt over GDP is high, and so forth. And I always challenge them that before you discuss all those, we are in very, very peculiar 30 years that continue depressing the prices of asset value in this country. So accepting with all those issues that you foreign investors are concerned about, but let's look at the value relative to its intrinsic value. First, let's see that gap. There is a gap between the intrinsic and the stock price. And then start answering those questions. Demographics, yes, it is an issue, but at the same time, there are lots of not used, very high quality populations in this country. Like you may laugh, but Japanese are very eager to integrate the male and female labor getting together. It is true because female labor market is not fully activated because of the family situation, that many of the very high skilled housewives cannot go out to the labor market. And I'm sure that time will come that those skilled professionals who are not able to work like others will come to the market. Then population will be, and also aging people are very, very healthy and energetic. That people and many companies starting consider to activate those people who are older than 60 or 65 years old. Japanese are very healthy population, healthy. Japanese people are very healthy, even if they get older compared with other countries, I think. Debt to equity ratio is higher than the others. Of course, if the GDP is continue growing zero and public debt structurally have to go up to support the social welfare expense. But now, if world is getting into the phase that prices continue increasing with mildly, even if it's mild, that situation will be improved, and improvement in Japan will be much faster than the other countries. So that's what I answer to my young professionals. If world concerned about those, let's first look at how cheap it is and how the quality relative to its value is attractive. And number two, answering those questions. And risk and reward ratio is much higher to look at Japan, even with considering all those problems.
Thank you very much, Abe-san. And just on what you were speaking there, I was reminded of another clip. With the wonders of YouTube, you can find things quite quickly. I also, we started with Buffett, and we're going to go to a clip here from Charlie Munger I wanted to play you, and just to get your reflections on that. Just give me a moment to play the clip.
Would the United States follow the path of Japan in the last 10 or 15 years with a long term of almost zero economic growth?
Well, the answer to that is, of course we could. It's like the man said about baptism. I believe in it because I've seen it done. Japan has proved that an advanced nation can have a long period of utter stasis following a bust. But I don't think if we have trouble, I don't think we'll handle it as well as Japan. Japan is a very courteous, submissive, amazing place. If they were going to have a long period of stasis, you could hardly find people who would handle it better if you selected over the whole earth. They have the right behavioral ethos to. Here, I think we'd have a lot more tension if we had a long period of no growth at all. And so I hope we aren't in for that. But if we did have it, in the big scheme of things, is that a tragedy? At the current living standards of the United States, would it be a tragedy if we held level for a considerable period? But yes, could that happen? Of course it could happen. It did happen. And remember, Japan paid every fiscal trick known to man and every Keynesian trick known to man. And when it was all sudden, they got 20 years of stasis. Now, it's a different place, different system. We're different. It doesn't mean you can, but is it conceivable? Of course it's conceivable. It's conceivable because it happened.
So there, and I should say that's a video from 2010. I wonder if you had any remarks on what he said there on either side, either from the Japanese perspective or with the rest of the world not dealing with a similar situation of rising debt levels and low or no growth quite as well as Japan did.
Well, what I learned over the past 30 years, I was right in the middle of this transition. Full 30 years I'm here. I was here. I've been here. I really have a chance to understand the magnitude of bubble and its burst. How big that bubble was that we had 30 years ago. I don't see that yet in the US. Although there are here and there, I see here and there that similar phenomena that in the US. But US has more experience because the United States had that experience early 90s when Great Depression came. So ability to adjust to abnormal to normal, a little more experience compared with us. In Japan, we got into it because we are totally unprepared. The concept of market for Japanese was new. And through this process, we learned it. So Japan now being emerged as a stronger system that understands that mechanism better. Whether or not that would repeat it in the US, well, since human nature has not changed that much over that time, it may happen, but US has ability to adapt and correct it quicker than the Japanese market. But one of the wisdom that the United States, I think, have better than Japan is taking time to adjust it. And that time is the time that they should look for other opportunities, because system is built on, in the US, system is built on with the expectation of certain return. And if that return is not achieved, the capital will start to look for the other opportunities. And that's the interesting thing that I feel this time around, that the very, very big capital that has enjoyed very stable return for many, many years now will get stuck. That expectation is not fully achieved, then they'll start to look for other opportunities. And Japan will be one of the candidates for them. So before that time happens, please be interested in Japan.
Well, thank you so much, Abe-san. We really appreciate your insights today. I know you're very busy, so we really do appreciate your time. And again, thanks to your team at Sparx as well. Thanks very much for doing the interview with us.
Robert, thank you very much. I enjoyed it very much. And I have to say that talking with you like this, that really feel that we are in the completely different time. I appreciate it. Thank you. And thank you to all.
Thank you.